Now we have a very interesting dynamic. So we have the economy essentially reversing. So you have a favorable policy for economic prosperity. You have everything that should start moving to the upside. The businesses and the companies, everything will be boosted in the next like 1 2 years. It will depend on how long they keep the policy favorable to the economy state. And if you look into the investment side, into the public markets, you see things that are just amazing. So, for example, if you compare some companies from like the bull market to today's market, which is the opposite. So you have companies that were valued 10 times compared to their revenue, and today it's like 10 times under the revenue. So technically, if they get to the same numbers, you can 100x the money that you invest today. At the same time, you have companies that are being boosted by the media and they are quite popular. And if you compare some of those companies to other startups, you can see that there's companies on a similar state in terms of their revenue. And then you compare the market caps and you have one that is 10 to 20 times cheaper because the media is not boosting that company yet. So while most people that are getting excited about the markets on favorable conditions may be deploying capital to those companies that are being boosted by the media, which are good companies, but they already went up quite a lot compared to their initial position like 1 year ago, for example. There are some companies on a similar state that no one is hearing about that are just as good as the others, but there's like 10 to 20 times price cut down in terms of how much they're being valued compared to these ones that are being so popularized around the news recently. So the markets are essentially an emotional space in raw terms. So basically, the capital is either going in and out, mostly based off like the news that are spreading out around companies. That just makes people getting hyped on certain companies and they want to invest on. But remember that that's the emotional cycle. The emotional cycle is usually opposite to what you want if you want to invest and be successful. So you should always look to be rational when you are investing on companies. And before you start to invest, you should actually understand the space. You should understand how to read the reports of the companies on monthly basis because there are a specific structure for companies to be going from the start point till they expand and become profitable. And those things are tied up to the way money works and how basically you have to pay taxes on profits. And then, like, what they usually do is as the company is growing, they get more and more cash flow, they increase their revenues. They want to use the money not to become profitable on a short term, but to expand the company. So the startups are optimizing for growth. They don't want to become profitable too early. They just want to accelerate the growth as much as possible to increase the upside for the incoming years. So their goal is usually this one, especially on the Nasdaq, which is a space where most companies that want to be big in the future are positioning themselves. At the same time, it's just the better way for them to acquire capital is to just go through the conditions to be listed on Nasdaq. Because once they get there, the capital that can go into the companies is much more than before or in other exchange that they could be listed on. So essentially, the public listed companies are allowed to just raise a lot of capital very fast thanks to these public markets. So, yeah, essentially, you should understand a number of things, like I was mentioning, because if not, the media will just play the narrative for you and you will never be succeeding well in the space of investments in general because media essentially provides liquidity for the institutional investors to usually have their way out of the companies. So this means that when they're popularizing a company on the news and talking really nice things about the company in general, all they are doing is provide liquidity for the big players, the institutional players that are already there from lower positionings in terms of the price they got in. They're just looking to get out. That's why you start to see a bunch of good news about the company. So it's like the final boost on the price that is being artificialized through the news to actually guarantee that the institutional investors can maximize their returns and can just get out easily because they have to sell. That means someone has to be buying.